So, dear students, good morning. This is a balance sheet. There's a horizontal balance sheet. The liabilities are presented on the left side and the assets are presented on the right side. There's no rule that you had to present the things like this in a balance sheet. In India, this is a convention for us, and in some countries, the assets on the left side and the liabilities on the right side. Fine, there is a heading. What is a heading? I taught you in the first semester. I just want you to make out what should be the heading for this table. Okay, so you might have made some heading. What could be that heading? Please cross-check whether what you have formulated, what you have, framed as a heading is correct or not. The balance sheet of X Limited Company as on 31st March 2016 and 17 or 31st December 2016 and 17. This is how the heading should be. As on the last day of the financial period, you have to present the balance sheet. Fine. Liabilities on the left side. You have equity share capital, reserves and surplus, debentures, long-term loans, bills payable, sundry creditors, other current liabilities. On the asset side, you have land and building, plant and machinery, furniture and fixtures, other fixed assets, cash in hand and cash at bank, bills receivables, sundry debtors, stock, and prepaid expenses. What is that you observe here? You see the order of permanency. That is, the longest item in the company, equity share capital, is taken first. The next longest is reserves and surplus is taken next. The next longest debenture next. And the shortest item is other current liability taken at the end. Similarly, when you look at the assets also, land and building is the longest item, therefore it is taken at the top. And as you go down, the shortest item of asset is presented at the bottom. This is order of permanency, okay? It is going from longest item or the asset to the shortest asset, the longest capital to the shortest capital, okay? So this is one order. There may be another order also, okay? You can also order of liquidity. The shortest item you can take at the top and the longest item at the bottom, both for liabilities and assets. Fine. So this is the problem given. And the question is, you're asked to prepare the comparative balance sheet. The calculations are very simple and this problem is very easy to understand. You don't need to, make big calculations. It is plus and minus only. It is as simple as that. What you have to do is you take the liabilities at the top and followed by assets, or you take the assets at the top followed by liabilities. I mean to ask you that you convert this horizontal balance sheet to a vertical format of the balance sheet, just as you see in the annual reports of any company, including our hospital, KIMS Hospitals Limited. Okay, fine. Right. You remember these items, then we will go to the solution part. Okay, equity capital, resource and surplus, debentures, long term, and so forth. Okay, first we will take liabilities, right? Column 1 and column 2 are drawn from the solution. I'm sorry, problem. The problem is this. This is the problem. Column 1 is liabilities and 16 and 17. These two columns are taken together as one column here, okay, in your solution. Okay, liabilities. Liabilities. 16 and 17. Right? 16 and 17. Okay. Right? So look at this. This problem is in the order of permanency, and the solution, look at the solution. Solution is in the order of liquidity. The longest items are taken at the end, 6 lakhs, 8 lakhs, 3 lakhs, 30,000, 2 lakhs, 20,000. Look at this. Okay. 3 lakhs, 30,000, 2 lakhs, 20,000, 22 lakhs, 2 lakhs, 22,000. So these two items are taken in the solution at the end. They have gone for the order of liquidity. Okay, order of liquidity. Bills payable is taken as a first item. What was bills payable? Bills payable 5,000 is the shortest item, and that is taken, okay, as the first item. You can go in any order, but to avoid the confusion, whatever order that is given in the problem, you can follow that order. Okay, but it is up to an individual analyst to follow whichever is convenient for him or her. Okay, look at this. Bills payable 5,000, 45,000. This is the problem. Till here, it is the problem. The solution is only this column, the increase or decrease column. Okay, and the percentage increase or decrease column. These two columns only are added so that it becomes your full-fledged solution. Fine. Bills payable in the year 2016, 5,000, and 17, it is 45,000. Okay, I'm sorry, 50,000 and 45,000. So the difference is, it is decreasing from 50 to 45 minus 5,000. There's a decrease, increase slash decrease. So decrease is applicable here. Therefore, minus 5,000. Minus 5,000 by 50,000, the original amount, into 100 gives you 10%. The percentage increase or decrease. 10% is the decrease. Come to the next item, sundry creditors. Okay, it's 1 lakh in the first year and 1,20,000 in the second year. There is an increase. So increase is indicated with the plus. 20,000 increase by the original amount in the first year, 1 lakh, into 100 gives you 20%. What is the 20% increase or decrease? It is increase of 20% indicated with 10, I'm sorry, plus, indicated with a positive sign, increase. Then other current liabilities, okay, 5,000 and 10,000. There's an increase of 5,000 indicated with plus sign, and 5,000 by 5,000 into 100, it is 100%. 100% is positive increase indicated with plus. Then other current, total current liabilities, 1,55,000 in the first year, that is 2016. By the second year, 2017, it became 1,75,000. So 20,000 is increase, denote it with plus. Okay, by 1,55,000 gives you 12.9%. It is an increase indicated with plus. Then debentures. Debentures. This is the total of current liabilities. Debentures, 2 lakhs in the first year and 3 lakhs in the second year. There's an increase of 1 lakh. 1 lakh by the previous amount into 100 gives you 50, which is positive, 50% increase. Okay. Then long-term loan on mortgage, 1,50,000. It was in 2016. In 2017, it is 2 lakhs. Okay, there is an increase of 50,000. 50,000 by 1,50,000 gives you 30% increase. Denote it with plus or positive sign. The total liabilities is, the total liabilities is 5,05,000 in the first year, second year, 6,75,000 in the second year. Right, there's a 17,000 increase in the total liabilities, which is positive sign. So 1,70,000. 1,70,000 by 5,05,000 into 100, 33% increase. 33% increase. Then equity capital 6 lakhs in the first year, 8 lakhs in the second year, reserves and surplus 3,30,000 in the first year, 2,22,000 in the second year. Both of them are increase of 2 lakhs in the case of equity share capital and 1,08,000 in the case of reserves and surplus. So these two items, 22 lakhs by 6 lakhs into 100, 33%, and 1,08,000 by 3,30,000 is 32.73%. Fine. So this is the percentage minus. Okay. Yeah, look at this. This is not increase. This is a negative symbol. It's a typographical error. 330 became 222. It's a minus symbol. Okay. So please note this. It is minus 32.73. So the total of increase in the liabilities is 18.26. How do you get it? The total of liabilities in the first year, 14,35,000. In the second year, it is 16,97,000. The difference is positive. Okay, this is negative. There are some negatives like 1, okay, and last one. For the first and last are negative items. The rest all are positive items. So the net of all those positive and net negatives is 2,62,000 by 14,35,000 gives you 18.2%. 18.2%. Okay, 18.2%. You got it. You got it, right? Now, this is the case of liabilities. How the items are increasing, okay, by absolute figures in this column, by percentage in this last column. Same thing, do it for the assets also. Look at the assets. Now, here in this problem, he has taken current assets in the beginning and the longest items, long-term assets or fixed assets followed by. Okay, current assets, cash at bank and in hand, 20,000 in the first year, 80,000 in the second year. There is an increase of 60,000, therefore indicated with positive sign. The 60,000 by, 60,000 by 20,000 into 100 is 300%, positive 300%. Bills receivables, 1,50,000 and 90,000. There's another 60,000 difference. The difference is decline. So therefore indicated with a negative sign. Minus 60,000 by 1,50,000 gives you minus 40%. Minus 40%. And likewise, sundry debtors, 2 lakhs and 2,50,000. 2,50,000. And there's an increase of 50,000. So therefore indicated with plus 50,000 by 2 lakhs into 100, 25% increase, therefore indicated with plus. Likewise, stock, 2,50,000 and 3,50,000, 1 lakh increase, 1 lakh increase by the original amount, 2,50,000. There's a 40% increase in the stock. Prepaid expenses were not there in the first year, but now there are prepaid expenses paid in advance are there in the second year. That's 2,000. Okay, so there's an absolute 2,000 figure, and since there is nothing here, you don't need to do anything here, but you can simply say 100%. But, if you say zero, right, 2000 by zero, it's, it's no value. There's no value. Therefore, it's blank. Then the total current assets is equal to 6,20,000 and 7,72,000. Increase of 1,52,000, and this increase by the total, okay, of current assets, original amount, gives you 24.52. 24.52 is the percentage positive. Likewise, look at the land and building. It was 3,70,000 and now 2,70,000. There's a decline of 1 lakh, minus 1 lakh. It became minus 1 lakh by 3,70,000, gives you minus 27%. And plant and machinery, 4 lakhs and 6 lakhs, 2 lakhs increase. Okay, increase of plus 2 lakhs by 4 lakhs into 150% increase in plant and machinery. Furniture and fixtures, 20,000 and 25,000. 5,000 is the increase. Increase of 5,000 by 20,000 into 100 is 25%. Fixed assets, 25,000 and 3,000. Therefore, you see 5,000 increase of 5,000 by 25,000 into 100 gives you 20%. 20% positive. This also is positive. So you had to categorically mention whether it is a positive item or negative item. If you are not mentioning any negative, then it means it is a positive item. If you by mistake, if you forget to indicate the minus symbol, it is implied in accounting as positive symbol. Okay, so if it is a negative, you must indicate it with a minus. Then the total of fixed assets, 8,15,000 and 9,25,000 in the second year. 1,10,000 is an increase. Therefore, increase by the original amount gives 13.49%. 13.49% is your increase in the total fixed assets. Look at the total of the assets. 14,35,000 is the total of assets, and 16,97,000 is the total of assets in the second year. The difference is 2,62,000, which is positive by the original amount 14,35,000, which is 18.26%. And you will be surprisingly asking me, sir, the liabilities also are the same, 18.26%. Why? Because the increase in liability must be the same in the increase in the assets also. That's how the balance sheet is taught in your first semester. Fine, you have done all these calculations. How you have done the calculations, okay, and how the assets are changing, okay, increasing or decreasing. You make a description of all the entire explanation that we had just now will become your interpretation just like this. Okay, the comparative balance sheet of the company reveals that during 2017, there has been an increase in fixed assets of 1,10,000, which is 13.49, while the long-term liabilities to outsiders have relatively increased by 1,50,000, and equity share capital has increased by 2 lakhs. This fact depicts that the policy of the company is to purchase the fixed assets from the long-term financial resources, thereby not affecting the working capital. You're not buying the long-term assets with the short-term financial resources. So you're not touching the working capital. You're buying the long-term assets with the long-term resources of finance. Then the second point is current assets have increased by 1,52,000, which is 24.25%. Okay, and cash has increased by 60,000. On the other hand, there's been an increase in the inventories amounting to 11 lakhs. The current liabilities increase of 20,000, that is 12.9%. And this also confirms that the company raised the long-term finance even for the current assets, and resulting into improvement of the liquidity position, improvement in the liquidity position of the company. Look at this. There's a significant difference that you see. You cannot finance the long-term assets from the short-term financial resources, and you cannot also finance the short-term assets from the long-term finances. But in this case, the first rule is applied, the second rule is violated. That is, you're using the long-term finances to fund your current assets. That's not accepted. You can just interpret in a positive way, saying that it is healthy financially. The third point is reserves and surplus have decreased from 3,30,000 to 2,22,000, which is 32.72%. Okay, which indicates that the company has utilized reserves and surplus for the payment of dividends or any other, redemption of the shares or bonds, or maybe to issue the bonus shares. So whatever it is, the overall position of the company is satisfactory. Okay, you can say if all rules are fulfilled, okay, then you can say the company's financial position is excellent. The company's financial position is, okay, impressive. So these are the concluding sentences or words you can write. This is also an essay. Comparative balance sheet. Comparative balance sheet. Same thing should be followed. Okay, the calculation part I'm telling. The interpretation may be slightly different. The format is same for the income statement also. Okay, first year, second year, increase or decrease, and percentage increase or decrease. That's it. So this is for your essay, comparative balance sheet.